So what made you want to talk about money creation?
Well, I wanted to use this as a way of having a dialogue about money creation and what that actually means to ordinary people like myself. I mean, if you were to enter money creation into Google right now, you would learn an awful lot in a short space of time. But what I wanted to do was to distill down all my research into a straightforward explanation without the use of technical jargon or charts and graphs. And after that, I hope that people will challenge it and discuss and debate what it all means.
So when did you start?
I started, well, after the crash in 2008, I read a book called Fool's Gold by Gillian Tett, in which she lays out the path to ruin that all the big banks trod from the mid-1990s to the 2008 crash. And it really got me thinking about the subject of money and the question of how money is created.
So how is money created?
On a computer. Money is created when numbers are entered into a computer via keyboard. Very little of it is actually created as cash, as notes and coins and so on. And as everyone knows, cash is being used less and less these days. Very little of it actually has a tangible form. It's just numbers, digits on a computer. And online banking, for instance, is your bank's computer talking to your home computer.
So who gets to create it on a computer?
Well, that's two groups of people, the government and banks. The government does it when it builds hospitals and schools and makes sure that we have enough police on our streets to maintain law and order. And it does it using its own bank, the Bank of England, which is a bank that operates just like a bank. High street banks, Lloyds, HSBC, NatWest, Barclays and so on, they create money when they lend, which I'll explain later.
So do you mean the government doesn't spend the money it's collected in tax?
No. The common belief is that the government collects tax and then spends. But if it taxes and then spends, then where does the money come from in the first place to pay the tax? The answer is the government created it. In the olden days, it created it all in the form of golden coins and notes and so forth, but nowadays the vast majority of it is created on computer by the Bank of England.
So if it can just create money, why do I pay taxes? For services?
Well, the reality is that the government spends money and then taxes us. But the purpose of tax is not to pay back what the government has spent, but, and this is the important bit, it is to remove money from circulation. Otherwise, if it kept on creating and spending money without limit, then there would be too much money in the system, which would overload it, and then bit by bit each pound would become less and less valuable, and ultimately worthless, which in turn would lead to hyperinflation, which obviously we don't want. So this is a balancing act between money created and spent and tax collected and removed. And this is always an ongoing process. Interestingly, the government refers to tax as revenue, which means return, and demands that we pay it in pounds only in order to maintain the value of our currency. The tax is returned and written off and is ultimately what gives our currency legitimacy and validates our trust in it.
So just to reiterate, the government doesn't have to wait until it has collected tax before it can spend?
No. See, the thing is, like I said before, the government controls the creation of money. And whilst it would be foolish to think of money growing on trees, politicians, when they say that the government doesn't have any more money when it's all run out and spent, that is simply not true. I mean, think about it. Even when the NHS is in crisis and that, cutbacks are being enforced, the government can still propose going to war without having to wait for all the taxes to come in order to pay for it. And that's because it controls the creation of money. It can create it whenever it wants and to what degree it wants, so long as there are people to work and materials to buy.
So why doesn't the government just go and create all the money it needs to go to war and to pay for the NHS?
Yes, well, that's a good question. It's a policy decision, really. But what I will say is that the system always remains the same, but what changes is how it's used according to policy objectives of the government at any given time.
So is our tax system fair?
Well, that is the question. When we hear of individuals or of a corporation having millions or billions of pounds locked away in some tax haven somewhere, and we look at how much is deducted from our wages as tax, we think that it isn't fair, that people who are already extremely wealthy should be paying so little in tax. But it's up to government to make it fair because it has the power to do so. The other question is, why does the government allow tax havens to exist?
So what if the tax collected is insufficient to balance the books? What happens then?
Well, then we have a deficit, but that's not necessarily a problem. See, the deficit is the gap between what the government has collected in tax and what it has spent in any particular year. It is the government's responsibility to create the money to meet the needs that arise through running the country, and in so doing, put money into the society so that it can work and function properly. The deficit is simply the push and pull of living in a capitalist society.
So how is this deficit managed?
Well, the government creates IOUs called bonds or government securities that are sold to the public as a form of savings. I mean, you can go on to National Savings online and find a whole range of different bonds with different rates of interest that you can purchase at any time, but the huge majority of them are sold by brokers who are in business to buy and sell bonds in huge quantities to pension funds and other financial institutions. And that's what government borrowing is. It's just borrowing from you and me to make up the gap of tax collected and removed and money spent.
So why is there a gap? Can't the government work out exactly how much it needs in tax to balance its books?
No, and it can't know. And that's because it doesn't know how much exactly it's going to spend in any given year. Any number of things can happen: a national emergency, going to war, the Olympics. Nor does it know exactly how much tax it's going to collect for the rest of that year and remove to offset what it has spent. And it doesn't have to.
What do you mean it doesn't have to?
Well, because the government is not like a household or a business, in that it has total control of the creation of money. You will hear politicians and economists say that, the government is like a household or a business and it must live within its means. But, the government is the creator of its means, which you and I are not. I mean, you and I can't just create money on a computer, but the government can. When we hear that the government has to raise taxes to pay for this or that, the NHS being a perfect example, again, it's not true. The government could resolve the NHS funding issue. It would need to determine what needs to be done and cost it out, and then create the money necessary to pay for it. Some of that money would go to paying for new equipment and new buildings, and some of it would go on staff wages. But it doesn't just go down a black hole. And in all cases, some of that money would come back in the form of taxes over time. And if the amount collected doesn't meet the money spent, then new bonds will be created and sold to make up the difference.
So why doesn't the government do this?
Well, like I said before, that sort of thing is a policy decision. For example, when the government bailed out the banks in 2008, it created all the money necessary to do so, which was just a policy decision. If you go online, you can find a letter dated the 29th of January 2009, in which the Chancellor of the Exchequer, Alistair Darling, wrote to Mervyn King, the Governor of the Bank of England. This letter authorised the governor to create £50 billion to bolster the balance sheets of high street banks, in the hope that they would be encouraged to sort of lend more money following the crash. But as we know, they didn't. But here Darling says, and I quote, I authorise the bank to purchase up to £50 billion of private sector assets under this facility." End quote. Now, this £50 billion did not exist before Darling wrote his letter. So here's the proof that government can create money at will.
And what are these private sector assets?
Well, they are mostly government bonds. So, in other words, the government is creating money to buy its own debt.
Then why was a policy of austerity introduced after the crash?
When the coalition government came to power in 2010, it said that it had no money left to spend on public services because the previous government had overspent. The coalition government said that its number one priority was to balance its budget, and to do that it needed to cut spending on public services. But now that you know how money is created, why was austerity introduced? And now that the present government has also announced that as of October 2018 that austerity is finished, just like that, without any explanation as to how and why. Like I said, it's a policy decision.
Let's move on to talk about banks. You said they also create money on a computer. How do they do it?
Well, say you want to have a mortgage or a loan. You go along to your bank and you go through the process about your income and whether or not you'll be able to repay it and so on. And if you're approved, you're asked to sign an agreement in which you promise to repay the amount of the loan plus interest. Then the next thing that happens is a number appears in your bank account. And that number, which is money as far as you're concerned, has been made up by the bank on the basis of your promise to repay it.
So the bank doesn't already have the money it can lend you?
No. It has the money it needs to run the bank, but the loan it makes are all made up. It is in fact your promise to repay the loan which brings the money into existence. That is what creates an asset for the bank. The amount it puts into your bank account for you to spend is a liability for the bank, because it depends on your willingness to repay it. That's all there is to it. In effect, money is created out of thin air and consists of a series of promises between you and all those people that you interact with financially, which includes the bank and the government when you pay your taxes. In fact, money is just a huge worldwide system of trust.
So what about deposits? If I put my money in the bank, doesn't the bank use that to make loans as well?
Well, that's what I thought originally, but during my research, I learned that your deposit isn't really a deposit at all. It's actually a loan by you to the bank. They do not lend out the money that you put in the bank. Your deposit is used by the bank to run its business. That's why you will see a sign on every wall, on the wall of every British bank, that your money is safe up to the value of £85,000, which is the government telling you that it will guarantee to compensate you in the event that the bank goes bust.
So how do banks make their money?
They make their money by charging interest on the loans that they make up. See, any loan that they make up is new money being created, which then circulates within the system, which again is why we need taxation. As with government-created money, if the money created by banks outweighs the goods and services being produced, that could also lead to hyperinflation. What's peculiar about banks, unlike other businesses, is that the government gives banks a license to print money, to create money.
So why does the government do that?
Well, the purpose of this discussion is not to go into the history of banking, but you can look that up any time online. But banks have been involved in governments going back centuries. This is nothing new. The current setup is no different. How it works is simply that the government gives banks a license to create money. In 2014, the Bank of England put out a bulletin confirming that this was how banks created money, and that at the same time noted that most economic textbooks get this wrong. Again, you can easily verify this online.
So is there anything backing money created on a computer, like gold, for instance, something tangible and real?
The answer is no. Once upon a time, banknotes were backed by gold, and you could exchange them at the Bank of England for gold. But that ended nearly 100 years ago. Now, because of computer-created money, we have a system where all money is now circulating freely, just like blood in the human body. Money is keeping the economic body alive.
So what happens when loans are repaid? What happens to the money?
Well, it's destroyed. Say you've just made your last payment on your mortgage or loan and your debt has been cleared. But if you think that money can now be relended by the bank all over again, then no, that's not the case. All that happens is that your account is closed and the bank's liability is fulfilled. End of story.
So modern money, not backed by anything, has no permanent existence?
Yeah, that's right. And that's why it's essential to keep making more money. If all mortgages and loans were repaid and taxes exactly balanced government spending, there would be no money. All money is a system of credit creation. Government spends money into existence, banks lend money into existence, and both have to keep doing so for the system to keep going. Because, as I said, when loans are repaid or tax is paid, money is destroyed. So more of it needs to be created all the time.
So am I saving safe?
Well, if you've bought government bonds, then yeah, because as I said, the government can create its own money. It can never run out of money. On the other hand, if you have your savings in a bank, then they are not entirely safe, no, because a bank can go bust. But as I said, the government will compensate you up to £85,000.
You've explained how money is created and destroyed, and how money and tax go together. So then, why was there a financial crash in 2008?
Well, as I said at the beginning, that was the question I asked myself, and it was my research that made me realise that there was a problem with the system as a whole.
And what was that problem?
Instability. Our financial system is unstable. The banking system once served society, now it largely serves itself. And it does so, for example, by betting on and against all kinds of things like oil, coffee, cocoa, and of course, money itself. And in so doing, it has the power to distort the market price of any of the examples I've just given. But that's just one element. The other element, which was responsible for the crash of 2008, which began in America and then spread quickly across the world, was a fraud of epic proportions based on giving mortgages to people who the banks knew had no means of paying them back. The banks put these bad mortgages with properly created mortgages and sold them to investors, pension funds and the like. And when the fraudulently created mortgages started to default in large numbers, the whole system was suddenly under threat and would have collapsed, had it not been for the American government who stepped in and bailed out the banks involved.
And what about our banks?
Well, it had a knock-on effect for our banks because all the international banks had been lending to each other so excessively in the years leading up to 2008 and then lost trust in one another. And they would have collapsed had it not been for our government stepping in and bailing them out.
So why did our government bail them out?
Well, the government said that the banks were too big to be allowed to fail, and if they didn't bail them out, then the whole financial system would have collapsed and brought about economic ruin. However, there was another alternative which would have given the government greater control. They could have followed the Swedish example. The Swedish government had its own financial crisis in 1992, but instead of bailing out their banks, the government took over their banks, threw out all the senior management, restructured it, and then only allowed the banks to go back to private businesses later. You know, it's funny, at the end of 2014, there was a debate in Parliament with the title Money Creation and Society, It was the first debate about money in Parliament for 150 years. And you know how many MPs turned up to debate it? 30.
So how does debt factor into all of this?
Well, we have gone from a belief that debt was something almost evil to a society drowning in debt. And it's so easy to get into debt without having the means to repay it. Student debt is a prime example. And how can an 18-year-old have the faintest idea what they'll be likely to earn in 5 or 10 or even 20 years' time, and yet they're expected to take on debts of thousands of pounds that they might not be able to repay until they're middle-aged, if ever. When I explained earlier that all money created by banks was created on a computer, what I didn't emphasize was that all that money is created as debt. And by that I mean bank-created money. So given the present level of private debt, which now exceeds the level immediately prior to the crash in 2008, the question is, can all this debt be repaid? In 2010, the then Governor of the Bank of England, Mervyn King, said, "Of the many ways of organising banking, the worst is the one we have today."